Right now, somewhere in the world, a financial disaster may already be quietly beginning. Not with headlines, not with panic, but with silence. Because history shows us sometimes very dangerous. Every major market crash looked completely normal just before it happened. And today, the global stock market is flashing signals that most investors are ignoring. In this video, I will show you the hidden warning signs, what big investors are secretly preparing for, and how you can protect and even profit if your crash comes. Because the next market crash will not destroy everyone, it will make some people very poor and a few people extremely rich. Why crash fears are rising? Let me ask you one dangerous question. What if the market is already falling, but you just don't see it yet? Across the world today, something unusual is happening. Stock markets are near record highs, but confidence is quietly collapsing. Investors are nervous, banks are cautious, governments are worried, and the reason is simple. Every major crash in history was preceded by the same three conditions: too much debt, too much optimism, and one unaccepted shock. Right now, we have all three. The debt bomb nobody talks about. The next crash may not start in stocks, it may start with debt. Globally, debt today is the highest in human history. Governments, companies, households, everyone is borrowing. The United States alone now carries more debt than during World War II, and here is the dangerous part. When interest rates rise, debt becomes poison, companies struggle to repay, banks frighten lending, consumers stop spending, and slowly the entire system begins to freeze. This is exactly what happened before 2008. Different story, same ending. The yield curve warning, one of the most accurate crash indicators in history, is flashing again right now. It's called the yield curve, and every single US recession in the last 60 years was predicted by the signal. When short term interest rates rise above long term rates, it means sometimes terrifying. Big investors expect the future to be worse than today. And today, this signal has appeared again quietly, without headlines, without panic. But historically, when this happens, a recession follows, a crash follows, and unemployment follows. AI bubble risk. Let me say something controversial. The next crash may start inside AI stocks. Artificial intelligence is the most powerful technology of your generation, but it is also the hottest speculation bubble in the market. A few companies today control almost the entire rally. Nvidia, Microsoft, big tech giants. When market becomes dependent on just a few stocks, the entire system becomes fragile. In 2000, it was interest stocks. In 2008, it was housing. In 2026, it may be artificial intelligence. Not because AI is bad, but because greed always arrives before crashes. Big investors are quietly preparing. Here is the part that should make you nervous. While retail investors are buying, big investors are hedging. Warren Buffett is holding record levels of cash. Hedge funds are increased protection strategies. Insiders are selling more shares than they are buying. And history shows us something important. When smart money becomes cautious, it is rarely wrong. They are not panicking, they are positioning, because crashes do not come with sirens, they come quietly while everyone else is celebrating. What could trigger the next crash? The next crash will not be caused by stocks, it will be caused by one unexpected shock. It could be a banking failure, a commercial real estate collapse, a geopolitical war, an oil price explosion, or a sudden recession announcement. Crashes never come from what people expect. They come from what nobody is watching, and once panic begins, algorithms sell, funds sell, investors sell, and market fall faster than anyone imagination. How smart investors survive crashes. Now here is the most important part of this video. Crashes do not destroy wealth, they transfer wealth from the impatient to the prepared. Smart investors do three things before crashes. First, they reduce risky exposure. Second, they hold cash. Third, they prepare a buying list, because the best opportunity in history appear during panic. Amazon, Apple, Google all become legendary after market crash. The difference between fear and fortuner is preparation. What you should do right now. If a crash happens tomorrow, will you panic or profit? Here are three rules I follow. Rule 1. Never be fully invested at market peaks. Rule 2. Always keep emergency cash. Rule 3. Buy quality and only during fear. Do not chase hype. Do not follow emotions. Follow discipline because in markets, those who survive crashes become leaders of the next bull run. Let me leave you with one final thought. Every generation experiences one definition market crash. For some, it destroys their savings. For others, it creates generational wealth. The crash of 2026 may not have arrived yet, but the signals are already here. The question is not will a crash happen? The real question is when it happens, will you be prepared or surprised? If you want to survive crashes and profit from market cycles, subscribe to this channel because on this channel I don't give news, I give strategy. Like this video so more investors can protect themselves and comment below crash ready.